Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
To the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Bottle at Bloomberg Surveillance. How do you listen to what we do? We're going to pause here in the modern digital world and say, what do you do after the show? And thank you for watching us on Bloomberg Radio and Bloomberg Television. The first thing you do is read the Bremo letter. It's the Bloomberg Surveillance newsletter. Lisa, tell us about this. The people, Ray YouTube and the others that keep track of this say this newsletter is successful.
Well, it's basically that if you don't catch all the interviews, pulling together snippets. And I will say that people say such fascinating things and it can get lost, but they speak to each other, which is one really cool thing that I enjoy. That people kind of weave together the day's narrative together.
Yeah, Lisa and Ed Duffner got a team of like 7 people, 3 interns putting this tome together. It goes on pages and pages. And of course, on Bloomberg Digital on YouTube, look for our conversations. Stuart Kaiser on the market. Bob Michael, they're just brilliant on how the new bond market is the old bond market. With that in mind, in charge of all of our economic coverage, international economics and policy correspondent Michael McKee joins us. The next 48 hours, CPI is a big deal. I get it, but I got to dovetail it with the day later retail sales. Piece the two together. Inflation report, consumer report.
Well, the consumer report obviously is influenced by the inflation numbers because then
it's
you
nominal.
have an artificial, it's nominal numbers. It's artificially increased. So it's more the trend that people want to see. And when I say people, I'm pretty much talking about the Fed and then anybody on a trading desk who's trading the Fed. And at this point, they're expecting a reasonably good month for the month of August with the retail sales up a little bit, but not going forward. That's the question. What happens as we get into September, October, November? And a certain amount of that will be determined by CPI prices, particularly, you've been talking about it all morning, oil prices, the fact that they're going up and they'll push, at some point, gasoline prices up significantly. So the interesting thing about that is we can wring our hands all we want, but there's nothing much that anybody can do about it.
Well, but it would be great to get your sense, to build on that, of how the Fed views oil prices, energy prices as an input, given the fact that it is inflationary on a headline figure, but does remove money from the discretionary pot of spending.
They could raise rates all they want. It's not going to change the price of oil. That's the problem for them. So they have to kind of look through it. They tried in the 1970s to be accommodating lower prices, lower interest rates in order to give people more spending power as gasoline prices went up, and we saw how that worked. So they're not going to do that again. I guess part of the question now is going to be when we get to CPI tomorrow, How much does headline matter to people versus core? Because the core is not expected to have gone up any faster, 0.2%, and on a year-over-year basis fall to 4.3%, which would be considered good news. And the Fed's going to be looking more closely at core. But after a while, if energy prices keep going up, it will feed into the core as well.
How many is the new data dependency when it comes to the number of months you have to see before Fed officials start to care?
I would hesitate to put a number on it. They use the old pornography Supreme Court defense. They can't describe it, but they know it when they see it. A couple of months is of increases would put more pressure on them to raise rates again. It's going to be very interesting this month to see what the SEP, the Summary of Economic Projections, and the dot plot show. Do they still keep that last rate increase in there to keep the markets from thinking that they are done?
Michael McKee, with an eventful 48 hours coming up. We'll look forward to that. And of course, he'll go beneath the headline data tomorrow at 8:30 on CPI, core, this, uncore, supercore, whatever it is. I can't keep track. One who can keep track is Kathleen Bisjonczyk, Chief Economist at Nationwide Mutual Insurance. Let's begin there, Kathy. Jerome Powell talks about the Dallas Trim Mean. I'm partial to the Nationwide Cleveland Inflation Index and the rest of it. Which inflation series do you follow to get a feel for what America's feeling from inflation?
Good morning, Tom. Happy to be with you. Well, I look at all of them, but I think, Mike's comment was quite noteworthy in that the headline, so with oil prices rising again and putting upward pressure on gasoline, the consumer, for some period of time, may even also look through these higher energy prices and say, okay, this doesn't mean that inflation's picking up overall. But if it continues, that could lead through to inflation expectations. And again, that's still a worry for the Federal Reserve because inflation overall is still high. Less of a worry because we've seen some nice disinflation. And as you mentioned, the super core inflation, which is core services ex rents, that has started to roll over, especially the 3-month annualized. But the core, I mean, if you really want to boil it down simply, it's really the core CPI measures right now that matter the most. Assuming we don't see oil go through, $100 per barrel.
It's a dual mandate Fed, and I got 3-month annualized forms of unemployment and jobs coming down nicely. Is the job market broken? Are we finally moving down to new levels of a lower non-farm payroll?
Well, far from broken. It's still a very strong labor market, but it seems to be cooling, and it does seem that the Fed's getting its way here. It's removing some of the demand, some of that froth, and yet, not crushing the economy. Time will tell how this plays out, but you even see the wage growth numbers, cooling. So I think the odds for soft landing have gone up. We ourselves are a bit more cautious, but we've trimmed the recession shortfall. We now think it's more of a mild instead of moderate. We have to be, reflective and respect the incoming data that inflation does seem to be moving, downward more quickly than we thought.
We were speaking with Claudia Sahm yesterday, formerly of the Fed and the Sahm rule, and she was talking about how we just don't know yet. We're holding our breaths, trying to understand whether the decline that we've seen in some of the employment momentum is just a softening or whether it's the beginning of something more protracted. How are you viewing this? How are you looking at this to understand which it is?
Well, I agree with Claudia. We definitely, need time. But the recent blip up in the unemployment measure was really because more people came into the labor force. The labor force participation rate, as you know, went up. And particularly when you look at what they define as the prime-aged workers, 25 to 54, we're back over the pre-COVID level. So that's a sign of a very strong labor market. You're pulling people in. The fact that the unemployment rate went up is just because job growth couldn't keep pace with that. It's still not a weak labor market. That said, the fact that the Fed's going to hold rates, we think, steady, and as other guests have talked about, as inflation comes down, the real Fed funds rate goes higher. That's where the restrictiveness comes into play. But I think at the same time, if you do get inflation coming down, it just takes some of the pressure. And in real terms, growth is higher because of that, right?
Kathy, there's also this lack of clarity around whether there's a structural shift in the labor market. We'd been talking about that a number of months ago about how, there just were fewer workers. And so you had to pay up in order to get anybody in the door. How does the UAW potential strike, the negotiations we've seen there, we've just heard from UPS yesterday on Bloomberg Television talking about how the increase in wages and the agreement that they came to is going to impede some of their profitability. But going forward, this is the norm for them. How does that shape your view about what we can expect, the stickiness of wages, regardless of how much the jobs fall, et cetera?
Yeah, and a great point. And it is, that is the risk that we do get that stickiness still in wage growth and inflation. As talked about, maybe going from 9 to 3% on inflation was sort of the easy part because of year-over-year and energy prices, until recently coming down. But getting the core and especially service prices to moderate even further, and wages play a big role of that. So it's something we're watching very closely, and it's definitely it plays into that whole profit margin squeeze. That's why we still have a recession. We do think that profit margins, get squeezed, but it's just not going to be quite as large of a shortfall as we thought previously.
You explained beautifully the complexities of our labor picture. Are the dynamics, the plumbing of how we look at the labor economy, is it a similar study to what you would have done 10 years ago or 20 years ago? Or do you have to have a whole new outlook on labor dynamics in America because it's a new America?
Yeah, that is a great question. And yes, you do look at it differently now because the backdrop, we have the demographic change rate in America. We have the aging of our society and the baby boomers continuing to retire. That's playing into this whole labor shortage. Yes, we have a labor shortage because cyclical forces, but also secular. And that is not going to necessarily go away. The question is how that is really handled by corporate America. Can they continue to adjust? And what we don't know, the big question is what happens with AI, right? And AI generative, does that replace some of the shortage of workers? And is it already doing that? So it is a very different dynamic. We never saw job openings relative to, the demand for workers relative to the availability be this strong. So job openings relative to unemployment is still very high. And we've not seen that, historically.
Kathy, are you going to be watching the Apple launch, the event, the marketing event, as Tom says, at 1 p.m.? And basically, are some of these product launches macroeconomic tools to understand the future of just some of those instruments?
Well, I have to say that myself, but particularly my younger son, is really very excited about these new launches. So if we don't catch it live, he shows me how to find it on YouTube. So I'll watch it one way or the other. But it is really exciting. And I think certainly in general, innovation, creativity, these are important. And obviously, Apple being one of the big performers up until recently, some of the issues with China. But in general, what we're seeing really like the top 10 stocks in the S&P have generated 80% of the gain of the index. It's pretty concentrated, right? And pretty impressive.
Kathy, thank you so much for the brief on the American economy. Kathleen Bostjancic with Nationwide. Kathy and I go back years, and I love talking to her because of the knowledge and the granularity underneath the headline data that we blather every day.
Well, I also love that her son also makes her watch the Apple launches and really get her excited about the products that she will then be encouraged to buy.
I would take it to the international claim, and this is, of course, the debate here of the new cord that goes into the new iPhone, is we have that effervescence, what Ned Phelps would call dynamism, and they don't, and that makes for the American difference. Interesting market, percent change in the Standard & Poor's 500, a negative 0.2%.
Coming up, we are going to take a look at what to expect from this particular
We're actually
event.
going to do it.
Well, look, you call him fanboy, which I'm guessing is completely abhorrent to him. But I will say, look, this is a big deal, not for Apple per se, but because it's such a big company in the S&P 500, in the Nasdaq, because it is such a big aspect of the U.S. economy at this point, and because of AI and generative intelligence.
My observation on this, and I've always tried to not be a fanboy, even though there's a zillion Apple things at home, is what's different now, and I didn't expect this, is Apple is cool with the kids. For years it was Android, only the old farts like you use Apple, and that's changed. And I did not expect that. And, it's not Huawei. Samsung's basic, I saw a chart the other day, it's shocking, the deterioration. But Apple's, because of the ecosystem, is cool.
Yeah.
I did not expect that.
Do you have cord wars at home? Like where people take each other's cords?
No, what we do is Dad buys more cords. So we have so many cords.
This is a real phenomenon.
The dogs chew on the cords and no one cares because there's another 5 cords to replace the one kennel fee.
The way you describe
kennel fee's the worst.
The way you describe your house, it's sort of 45.
Oh, you have no idea.
Just completely mismatched under the couch, and then you've got cords that are chewed up, lying everywhere. People yelling.
Yeah, Karen from Sydney knows this. We serve martinis at the front door.
I could guess
it's that bad. KB knows that. There's no question about it. Futures -9 Dow, futures -24. Coming up, the most anticipated conversation of the day. Fanboy joins us from Cupertino.
How can we deliver energy to a world that can't stop? Ongoing energy access is essential for people, countries, and economies to thrive, but unpredictable factors can disrupt the supply. From our state-of-the-art operational center, we maintain real-time visibility of the complete hydrocarbon supply chain to provide energy worldwide with a 99.8% delivery record. Discover how we are a reliable supplier to the world. Aramco, powered by How.
Do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg UK, your source for news and analysis covering.
It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Slice through the noise.
Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
It's hard to get away from tech. There is this structural growth story. So if we're in an economy that is slowing, albeit at a more gradual pace than we anticipated, then the structural growth stories are those that are going to outperform. The issue with tech is how far it's rallied this year. So I think the story going forwards in tech is going to be about being more selective.
Greg Bottle, U.S. Head of Equity and Derivative Strategy at BNP Paribas, earlier today as he talked about why he is abandoning some of his bear call, but also in the dominance of tech ahead of this Apple event, the marketing event. Tom Keene Alongside me, John Farrow, off at his 9 a.m. property preparing for that. But really, right now, before we get to that, I want to just talk about oil, hit it quickly, because we are looking at $91.51 Brent after this announcement by OPEC that there's going to be a 3 million per day barrel per day shortfall in total production on the heels of what we heard from Saudi Arabia.
West Texas Intermediate 88.52. I was just a 90 print on American oil. We're not there yet. Would be really something as well. You got some movers today?
Yeah, I just wanted to take a look at at some of the other stocks, and I really wanted to focus on the tech world. Oracle yesterday coming out and reporting earnings that were disappointing, in particular their cloud forecasts for their cloud sales. There had been such high hopes that it really explains why you're having such a significant drop, almost 10% at this point. It was 10% at one point, which would be, if it holds, the biggest fall since March 2020. Tesla shares off just a touch, but this yesterday after they gained 10% on the heels of a recommendation by Morgan Stanley analysts to buy the stock, that it was undervalued because of some of its newer technology. And then Apple, Tom, ahead of what we're going to hear later today, shares up 0.4%. I think it's important to stress when we're talking about incremental moves in some of these stocks, the market cap of these trillion-dollar behemoths really points to why we care. This is a significant part of the market. It's a significant part of the economic optimism that we've been hearing throughout the year. And it shows how little disappointments or little upside surprises can make massive swings in the share price.
Well, they do there. And again, the growth rate is all, and it's the revenue rate. And we need to make the distinction here before we get to Ed between Microsoft with growing double-digit revenues and Apple's not. I think a lot of people don't understand Apple's not delivering double-digit revenue growth.
It's not the same, right?
This soiree today is important. Is that it? Are you done with your, fanboy market
keep
movers?
Going, but let's leave it there.
We'll leave it right there. Joining us on, this is really cool, Ed Ludlow with Bloomberg Technology. We bust his chops. He's not a fanboy. He's technologically a look at anything, including he knows how to pronounce Huawei, and I don't. But behind him, for those of you on radio, it looks like an ice rink, but it's not. It is the architecture of Foster and Partners, and it is the Steve Jobs Theater in the beautiful new Apple campus that they have out in Cupertino. In what way, Ed Ludlow, will Mr. Jobs be at this soiree this afternoon?
Because it's a pivotal moment for Apple to kind of prove that Cupertino knows what it's doing, right? Lisa makes the point that from a market or weightings perspective, Apple's really key, right? 7% weighting of the S&P 500. But they're also at the center of all of the headline and political risk that's going on with China. You are exactly right, Tom, that this is not a company growing at double digits. They've had 3 consecutive quarters of overall sales decline. But in the June quarter, it was a record for China. And that puts the iPhone firmly in focus because in China, in the June quarter, Apple swung to an 8% top-line gain from a negative 3% year-on-year gain the prior quarter. And what Tim Cook said, it was all iPhone. So then how do you balance the action by the Chinese government to clamp down in the public sector on use of iPhone, with Apple hoping that the upgrades of the iPhone 15 generation coming today is what's going to spur growth in that key market?
Steve Jobs, Ed Ludlow, don't let the noise of others' opinions drown out your own inner voice. Apple has been steely. Rumors of Disney and all this and all the other fanboy garbage that you and Caroline Hyde cover every day. What is the inner voice of Tim Cook right now?
The iPhone is everything. It's 50% of sales, more than $200 billion last year. And the criticism that they face is on the strategy of reserving the key technological updates for the higher end. So what we expect today is 4 variants of the iPhone 15, a base model, a 15 Plus, but then a Pro and Pro Max. And the strategy from them has been to say, we're going to keep our key upgrades to the higher end, raise ASPs, average selling price, and hope that that resonates in key markets if volume growth's not there. We know volume growth's not there. The smartphone market globally has had multiple quarters of decline, particularly here in the US. But one data point I point to, it does matter whether people buy the higher end phone, But while the overall market has retrenched in recent quarters, look at the market share data. Apple has been able to continue to grow its market share even though the overall market's declined. And they're hoping that those higher-end technological updates today, which include a higher-end processor, the A17, titanium edges as opposed to stainless steel, and advanced camera technology, that will be tempting enough for consumers in a difficult market in China, but also here in North America as well.
Earlier in the show, Tom was talking about one more thing, and he was joking about this. And typically, this has been sort of
Ed's got a tattoo of that on his
one more
left
thing.
arm.
It has always been the main thing. One more thing, the exciting thing that people are going to cling on to. How much of a one more thing is baked into some of the expectations for today's event?
Well, it's full credit to Bloomberg's Mark Gurman. You know, we know a lot of what's coming today due to his reporting. I think you guys talked earlier a bit about the charging cord wars. This is not the one more thing, but it is the thing that people will talk about, the USB-C, because it was mandated by the European Union. And it will be interesting to see to what extent Apple kind of claim it of a move made on their own volition or by their own volition, right? But it will settle debates across households globally. You know, there is no greater pain or challenge to the global consumer or electronics enthusiast than the endless search of one's home to find a matching cable. And that may be settled today.
Well, okay, but that's not that exciting for people. Yes, it's exciting when it comes to settling some of the wars that happen frequently, but that's not exactly going to revolutionize the concept of Apple. How much do you expect them to start talking about artificial intelligence more materially after being so quiet in the hottest field of 2023?
I heard you talking to Mandeep Singh about this 24 hours ago. You know, Tim Cook and co have shown absolute restraint in talking about specific generative AI tools. You know, the line from Apple has always been that they have a long-standing competence in machine learning and AI. It is present in their software offering. All I can say is that will be a part of today's presentation, we understand, a later generation of iOS, but I expect them to show the same restraint about talking about AI.
Ed, one final question, because I know you got to get to the merch setup to get your Apple merch for this afternoon. The great surveillance to made of our guests is, will Telephone, T-Mobile, and Verizon come to the rescue? Do you just presume with all your, I'm serious now, with your serious reporting, are they going to do it again and competitively basically buy people's fancy iPhones?
Big part of the strategy here in North America. Go back and look at the questions on the earnings transcript about the support that Apple is expecting from the carriers. It involves heavily incentivizing the consumer. Because, again, we discussed it already, the strategy from Apple is to reserve the tech updates for expensive higher-end products. The carriers have to come in and offer packages in order to make it more accessible to a broader market. And how much pain they're willing to take to drive volume is at the discretion of those carriers. It's a fantastic question, and it's one that Cook gets asked about on the call often.
It's going to be fascinating today. We bust his chops about being a fanboy, but between Mark Gurman and Ed Ludlow, it is world class here at Bloomberg. Look to Bloomberg Technology this afternoon for our complete coverage of what fanboy is. Caroline Hyde fangirl? I don't even know.
I will not call them that.
Okay, I will.
I'm sure you will. I'll push back.
The fan duet will be with you with complete coverage of the silliness out in Cupertino, but it is a huge impact. I like somebody said today, maybe it's Lindsay Piegza, it's not a discretionary item anymore.
Yeah, exactly.
You know, it's a staple. I guess that would be the right economic phrase.
But an iPhone 15 isn't a staple. Maybe an iPhone 8 for a kid. I'm just saying, if anyone's listening in the household.
They're not listening. Trust me.
I know. No, I will say, though, that the idea of ending the cord wars would be a very nice thing, and not having to search for all of the little attachments and the right cord for the right thing.
The little attachment thingy always breaks. That's always the first thing to break.
Exactly. Or something gets in it.
I agree with you. You know, I guess it's a nuance, and we don't like the Europeans to tell us what to do, except Francine Lacroix. But the answer is, I agree with you that if we just get to a more streamlined USB, it's UBS-C cord. They named it after a Swiss bank. No. They named the cord after a Swiss bank. That's from Bloomberg Surveillance this morning. This market's terrible. We're going south.
Oh my goodness.
After Apple this afternoon, James Chanos will join. Legitimate, world-class.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
A cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead, the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
So
destinations.
functional.
Exactly, value functional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take to
How
do?
about the Instagram? Can you about that?
I can imagine.
Instagram moment with the sunset from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Live from New York City this morning. Good morning, good morning. Equities just a little bit softer. We're negative here by a third of 1% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, Apple set to unveil its latest iPhone, United Auto Workers softening pay demands, and ARM's IPO is 10 times oversubscribed. We begin with the big issue, CPI, up next.
We're going to have the CPI data. CPI data.
It's the CPI print.
CPI is important.
It's going to be in line with market expectations.
The headline is expected to be fairly high.
We do expect the CPI to come in strong.
Driven by energy prices moving higher.
Energy prices have ticked up.
We'll see what happens with the core.
We're going to get a continuation of the positive trends.
It's going to be very important if core CPI actually increases.
That would be more problematic.
The continuation of the drop feels the most likely scenario.
What does the Fed do with that?
I don't think the Fed's really going to change the trajectory in terms of September.
The question will become the November meeting.
They're either on pause or they got one more hike.
This is a very complicated time for the Fed.
The last mile is going to be hard.
Joining us now to discuss Morgan Stanley's Vishy Tripator, Cameron Dawson of New Edge Wealth. Cameron, to you first. What are you looking for in that CPI report tomorrow?
Yeah, I mean, what consensus has priced in is a continued sort of moderation in the core CPI, a third month in a row of it being just 0.2% on a month-over-month basis. The real eye popper is going to be the headline CPI, of course, driven by higher energy prices. And then it's a question of how the Fed interprets that, or at least what kind of degrees of freedom that gives the Fed to be able to back off on their policy tightening. Because in a world where headline CPI is accelerating, even if core stays flat, we're not sure if that really gives them the wiggle room to talk very dovish. At the end of the day, we've had a great deal of disinflation driven by lower energy prices. We can see that in non-durable goods inflation, which has gone from 13% to deflation back in June, but now that's starting to climb higher. So I think it presents an interesting predicament for the Fed going forward.
Particularly with crude close to 92, 91.80 on Brent, WTI just short of 89. Vishy, let's build on that. How do markets respond to what Cameron was talking about? Those two stories, headline CPI, driven potentially by gas prices, and core CPI, potentially showing some progress.
I think a lot will depend on the details. I think we do expect, I think Cameron, I agree with her, the core CPI will continue the progress over the last few months. Our expectation is 0.18% month over month for the August core CPI, and I think the deflation story in core goods will continue to be there. The acceleration in higher gasoline prices will mean month over month 0.61% is our expectation. I think this presents a challenging environment for the Fed for sure, but we think that there is nothing, we don't expect to see anything that will change the outcome of the September meeting, where we expect no hike from the Fed. And in our mind, Fed is done for hiking, and we think it'll be tough. The challenging thing would be messaging out of this would be a bit more challenging, but we think that the Fed has done enough to get their core inflation target heading towards their objective.
So, Vishy, you don't think the commodity market changes that? This is the note from Marko Kolanovic over at JP Morgan in the past 24 hours. This is what he had to say. The potential for the commodity price surge to feed inflation and extend central banks' hiking cycles. Would you disregard that?
Our view is that the Fed has done enough to bring down. Remember, their target levels are in core PCE terms, and I think they have done enough to get them down, and they'll be pleased with the trajectory of it. We don't expect that they will do a victory lap, but their language will suggest that they want to be long all optionality associated with it. But we think that's this is one of the reasons why we are constructive on duration, John.
How constructive? What are you looking for in a 10-year? I've got 350 over at Morgan Stanley with Matt Hornback, your colleague. I'm hearing 350 from Mike Schumacher. Bob Michael earlier on this morning was pretty bullish as well on fixed income. What are you looking for, Vishy?
I think we are end of the year at 365. You just revised our numbers up from when you had Matt on your show from 350 to 365. But still, that's a pretty meaningful. Meaningfully lower yields by the year end. We think the narrative will shift from slowing economy, and I think the market has been excessively, in our minds, focused on this, immaculate re-acceleration of growth narrative, which we don't buy into that narrative. I think the market will come to recognize that the economy will slow. There will be give up in consumption, and we will slow in the fourth quarter, and we won't expect to see an explosion of supply, anything outside of what's already in price. So all of that we think will contribute to lower yields to the end of the year.
Cameron, what are your thoughts on that re-acceleration argument?
I think that for now, there's really not much reason to doubt it, meaning that we continue to see data come in better than expected. And we haven't seen signs enough yet that you're seeing enough weakness in real data. If we're even thinking about the labor market, for example, we're still seeing initial jobless claims, continuing claims remain very well contained in that tight territory. There are signs that things are easing around the surface, things like job openings or quits ratios, but those aren't signs enough yet to say that the economy or the labor market is falling off a cliff. So as it translates to the bond market, we think the bond bulls will eventually be right, meaning you will eventually see lower yields, but the timing is important, meaning that the strong economic data just effectively puts a floor under yields and likely pushes out the ability to reach those lower yields until we see signs of actual economic weakness.
2-year this morning back through 5%, up a couple of basis points so far this morning on the 10-year. On the 10-year maturity, down about a basis point to 428. Mike McKee, that data fewer than 24 hours away.
Yes, indeed. And don't forget retail sales on Thursday if you're looking for that re-acceleration story. The question is, as Cameron put it, what is the Fed going to make of all this? We do get a role reversal in the forecast for CPI, with the headline expected to go back up again, energy prices to blame, and the core continuing to fall. Now, the core is what the Fed is going to be watching, so that'll be the important number. And tomorrow after CPI and Thursday after retail sales, we'll all be looking at this line. This is the Fed forecast. What do the markets think the Fed is going to do in November? As you can see, it's been very flat. People not expecting an increase, maybe about a 38% chance at this point for November, since September's sort of baked in as a no-move situation. So that's going to be the thing to watch. And then, of course, that's going to be influenced a lot by what happens at the Fed meeting. I'll leave you with this. Some people are thinking we're going to see a bit of a rise in services because the Taylor Swift and Beyonce concerts ended in August with a number of shows. And this is admissions prices and hotels. Now, hotels haven't gone up despite all the talk in the Fed Beige Book. We did see admission prices rise. The question is, did they continue rising through the month because the concerts came to an end? And does that mean we're going to see a big drop in September?
Thank you for that, Mike. Vishy can't wait to talk about this. Vishy, I actually know the team at Morgan Stanley's written about it. Are we modelling the US consumer off the fading bounce from Beyonce and Taylor Swift?
I think it's Beyonce, Taylor Swift, Barbenheimer. The combination of all those things have led to what I would consider to be a one-off extraordinary spending on entertainment. Remember, these are very small categories. For these small categories to have had such a major impact on consumption spending, it has to be really big. And it turns out that it has been really big. So this is an unusually a strong entertainment spending, and that extraordinary spending we think is a one-off, and we will come back to normalcy in the fourth quarter. So we do expect to see that consumption, pull back, and that sets the tone for slowing of the aggregate economy into 2024.
Cameron, it's almost hard to believe. Are we really saying that boom in discretionary spending this summer was down to a couple of movies and a few music concerts?
It's hard to think. I mean, I didn't go to any of them, but I think at the end of the day, the consumer has had the tailwind of being able to spend down excess savings at the same time that real wage growth did turn positive, meaning that as inflation moderated, people were getting more purchasing power, and that helped boost spending at the same time that you're seeing usage of credit cards go up. So that all has been a tailwind for the consumer all through the summer. And it's a question then of, does that turn in the opposite direction? We know that the excess savings have been whittled down. We know we have now the headwind of the return of student loan payments. And then it's a question about real wage growth. And if we see this reacceleration in inflation, do we get this golden period of real wage growth now turning back negative as we see things like oil, gasoline prices move higher? And that could effectively be the pinch that causes the consumer to slow down now that they're dealing with all these headwinds. It still remains to be seen, though.
Cameron Dawson sticking with us alongside Vishy Tripator. Your equity market going into the opening bell about 20 minutes away. Equity futures near session lows. We're down here by 1/3 of 1%. Let's get you some movers going into the open Here's Abby.
Hey, John. Well, we do, of course, have some stocks that are weighing on the futures this morning on that lighter tone that you're talking about. Oracle being one of them, in fact, down at this point, down 9.4%. I think this is going to prove to be the worst day since March of 2020. This, of course, is the infrastructure software company's cloud sales fall short. The growth slowed to 64% year over year, which is shy of the estimate of 67%. So folks really wanting high growth. RTX Corp, the aerospace and defense company, they lowered their full year outlook on the impact of the Pratt & Whitney powder metal manufacturing issues. As a result, some banks downgraded the stock, including Barclays and RBC. And then UPS down 1.5%. They are saying that the first year of their recently struck labor deal, well, it will be the most painful for them, front-end loaded, and we have many banks on the street cutting their price targets on the shares of UPS as a result, John.
Abby, thank you for that. Coming up on this program, Apple announcing its latest product lineup.
What continues to come out of Cupertino is the gold standard. This is a mini super cycle, despite a lot of the bears coming out of hibernation mode, after Apple's run.
We'll head to Cupertino, California, up next.
How can more women drive innovation in our industry? Women continue to be globally underrepresented in fields such as science, technology, engineering, and math. This reality inspired a series of initiatives designed to accelerate women's professional development within our operations. Discover how Aramco female researchers have been granted 352 U.S. patents and counting. Aramco, powered by How.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg.
They've gained an incremental 125 million users over the last 2 years. 250 million iPhones have not been upgraded in 4+ years. And if you look at this special chip camera technology and what continues to come out of Cupertino is the gold standard. And that's why I believe, especially with a lot of big carrier discounts, this is a mini super cycle, despite a lot of the bears coming out of hibernation mode, after Apple's run.
Dan Ives of Wedbush doing what he does best, making a bull case for Apple, the company kicking off its Wanderlust event at 1 p.m. Eastern in Cupertino and widely expected to unveil their latest iPhone, smartwatch and AirPods. This coming amid simmering concerns in China as authorities move to ban iPhone use amongst government officials. The region still a critical market for Apple. Bloomberg's Ed Ludlow joins us now with more. Morning, Ed.
Yeah, good morning, Jonathan. 4 variants of the iPhone 15 is what to watch for at the base end, an iPhone 15 and iPhone 15 Plus. But as you know, the strategy from Apple has been to reserve the higher extent of technology upgrades for the higher price models drive up those ASPs. iPhone 15 Pro and iPhone 15 Pro Max expected to have the latest generation of Apple's proprietary A17 processor, aesthetically having titanium sides as opposed to stainless steel. Sources tell us that that makes for a lighter weight but also more durable handset. And then there's the USB-C upgrade. This is not something Apple has done of its own volition, but something mandated by the European Union to revert to USB-C charger connector as opposed to the Lightning connector introduced in 2012. A key Bloomberg report overnight, John, which touches on the China story you referenced. Bloomberg reporting that iPhone 15 will be the first generation where Apple ships a built-in-India phone from launch. Historically, what they've done is ship built-in China handsets, and then with a latency of 6 to 9 months, started building that generation via Foxconn in India. According to our sources, straight from the get-go in key markets like India and other parts of Southeast Asia, they will ship built-in India handsets straight away, which talks a lot to what we've discussed in the last week, you and I, about the supply chain, but also political tensions between the United States and China.
Big time, Ed. This is not just about the CEO, Tim Cook. It's about the diplomat, Tim Cook. And Ed, I want to talk about that. This is our reporting.
Yeah.
Do you think this is something he avoids or even touches on a little bit later?
Yeah, what I would say, Jonathan, is keeping in line with the precedent set in the pandemic era, this presentation will be pre-recorded and shown as a video, even though it's displayed here on site at the Steve Jobs Theatre in Cupertino. That event at 1 p.m. Eastern Time, 10 a.m. local. So there isn't sort of this opportunity to put questions to him. Of course, there is intense interest and a lot of reporting from Bloomberg about the movement of supply chain from its high concentration in China to India, but that is a long-term thing. I just remind the audience of what you and I discussed over the last 7 days. China is still a key market. The June quarter was a record, and it was principally switchers in China. Those consumers switching to iPhone for the first time or from another model that drove that 8% top-line gain, a swing from a 3% year-on-year decline in the prior quarter. Key market from a sales perspective, but a supply chain perspective as well.
Ed, thank you, sir. Looking forward to your coverage with Caroline Hyde a little bit later on this afternoon on the iPhone launch from Apple. Love this quote. Jim Reed, Deutsche Bank, had this to say this morning. Welcome to my annual day of being seduced into buying a new iPhone that I don't really need but desperately want. Apple launches their new product suite today, which actually is a potential macro mover. Cameron, I'm coming to you on this one. How important is this event a little bit later this afternoon for this market?
I think if we're trying to extrapolate a macro read from this event, it's Apple's confidence about how much they can push price. Will they raise the price on this new iPhone? And can we read through that on the overall ability for prices to continue to rise to the consumer? We know consumer prices have risen materially since 2019, prior to the pandemic, by 20-30% in different categories. And so we're starting to see signs that some companies are having trouble pushing price even further. So is Apple confident that they can raise prices? And if they are, that might be a read to the consumer is stronger than maybe some people expect.
Cameron, to get the right signal from that, do you see the iPhone as a discretionary good or a staple?
I think that it's emerging into a very expensive staple. At the end of the day, people use the iPhone for a living, for their business, and so it's a can't live without, but it comes with a huge price tag.
Comes with a big multiple as well, given the growth that isn't there at the moment on that particular name. Vishy, let's put two stories together. Where bonds are priced right now, where rates are over at the Federal Reserve, and ultimately where multiples are for some of these growth names. Is there some conflict there, Vishy, in your mind?
In our mind, there is a conflict in terms of valuations and our look ahead into our constructive view on duration. We think that is this is from an asset allocation perspective. We think it's clearly a time to be overweight a range of fixed income assets, and our recommendation is being overweight fixed income, perhaps equal weight in equities in the global sense, but perhaps in equities we prefer rest of the world equities over U.S. equities. So that's how I would think about it.
Vishy, that international preference, can you just build on that a little bit more, given where Europe is, given where China is, what international?
So Japan is a big positive. India is a big positive from a equities perspective, from our reflecting the views of our equity strategists. I think in fixed income, there's a wide range of opportunities from mortgages, high quality credit. Not only, in fact, high quality credit, we would be even constructive on a double B credit, high end of the high yield credit as well. Will be constructive on that. The opportunity set to get to 6-ish percentage of type of total returns without taking enormous amount of either duration risk or credit risk seems like a pretty attractive proposition today, given the valuations you're seeing in the equity market.
Squeezing in the credit story there, Cameron. Two issues there in the equity market that we just shared with Vishy. Let's go through them one by one. One, can these equity multiples live with higher for longer in the bond market that perhaps, Cameron, you anticipate? And two, the opportunities abroad, given the slowdown we're seeing across the screen week after week in China, in Europe?
Yeah, I think you have to be extraordinarily selective within international markets, focus on the companies with very high quality, good return on invested capital. These indices continue to be value traps in aggregate, meaning that they've been cheap versus the US for an extended period of time, really for 15 years, have been in relative downtrends. Those don't seem signs of turning, which just means selectivity is key. And then when we think about valuations from the perspective of higher for longer rates, we think that the ability for valuations to be the key or sole driver of upside to equity markets, as they have been since the October low, has kind of reached its zenith, meaning that you really can't push valuations much above 20 times forward earnings with the idea that the Fed is going to remain tight. It doesn't mean that valuations have to collapse. That usually would happen if you have growth fears emerging, so a bit of a different scenario, but it's likely that you don't see that same kind of valuation upside being the driver of equity returns.
Stocks here near session lows with negative 0.4%. Cameron, thank you, alongside Vishy. Cameron Dawson, Vishy Tirupatur. Just want to share a statement with you from the White House on the President of the United States coming to New York City. The statement reads as follows: that President Biden will travel to New York to participate in the 78th session of the United Nations General Assembly on September 19th, 20th. In addition to addressing the General Assembly on the 19th, Biden will meet with world leaders as well. So that address coming from the president, just confirmation of that in a statement from the White House just moments ago. That address from the president, September 19th here in New York. Coming up, the morning calls and later, Chris Harvey of Wells Fargo on why he's bullish on the market's biggest stocks. That conversation is still ahead. Your opening bell is 7 minutes away.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
equities, stocks pulling back just a touch here going into the opening bell about 5 minutes away. Stocks on the S&P, we're down here by about a third of 1%. As the price action, let's get you some morning calls. First up, Wolf Research upgrading CVS to outperform $80 price target, seeing an attractive risk reward and more reasonable growth expectations. Next up, both Barclays and RBC Capital downgrading RTX after earnings, expecting limited upside after the defense company cut its annual sales forecast. And finally, D.A. Davidson trimming its Oracle price target to 105, slashing estimates after cloud sales fell short of what we expected. That stock is down by 10.7%. Coming up, go big or go home. Chris Harvey of Wells Fargo expecting the mega caps to outperform as we near the home stretch of 2023. Your opening bell just around the corner.
What do you worry most about your economy in Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
The Nasdaq reminding us how old we are. Harry Potter, 25 years ago. Unreal. Futures on the S&P 500. Futures negative here on the S&P, down by about 0.4%. On the Nasdaq 100, we're down about 0.5%. The main event for the Nasdaq later on today, the iPhone 15. There's your opening bell. Switch at the board and get to the bond market. The main event for the bond market, the broader market, really is tomorrow morning, 8:30 Eastern Time. CPI just around the corner, then on to retail sales, PPI and all that good stuff later in the week. The bond market looks like this. Yields lower by a single basis point, 4.2762. In the equity market, we're doing our thing in foreign exchange. The dollar's been stronger than weaker, then stronger again today. Euro dollar 107.13, we're negative a third of 1%. And to finish on commodities, new highs for the year on crude. Brent right now 91.63, WTI 88.50. Big story in the last month or so. 30 seconds into the session, we are down 1/3 of 1% on the S&P. On the Nasdaq, we're down about 0.4%. The stock to watch at the open is Oracle. Shares moving sharply lower after reporting slower growth in cloud sales. Chairman Larry Ellison touting the company's AI contracts, saying this: companies have signed contracts to purchase more than $4 billion of capacity, twice as much as we had booked at the end of Q4. Abby has more on this one. Abby, that stock down and down hard.
It is unbelievable to me, John. I am simply stunned. I rarely talk about technicals on this show, but this stock absolutely gapped down to its 100-day moving average. That's a fancy way of saying that the buyers just literally an air pocket. They just disappeared. The sellers stepped in, and it actually confirms the stock for a sub 100 decline. Whether or not that happens, we don't know. But that's how bad investors are taking this quarter. And it's interesting because when you read about it, it doesn't actually sound so horrible. And analysts to some degree are actually defending the company at the lows, down 11.7%, the worst day since March of 2002. Right now, stabilizing, down just 11%, the worst day since March of 2020. As for that quarter, there was actually lots of strength there. To your point, overall, the cloud grew 30%, not so dissimilar from Microsoft, Amazon, Google. There was a subset of the cloud growth that was 64%. Doesn't sound so shabby, but the estimate was for 67% growth. Many analysts are saying that high expectations, that's really the story. Valuation got ahead of itself. Valuation on the surface wasn't so high, 22 times forward, but from a historical perspective to where Oracle usually trades, it was super high. Plus, Monness Crespi did actually cut the stock to a neutral from a buy on that valuation. Also talking a little bit about how licensing and hardware came in a bit below expectations. But again, this stock just getting absolutely punished on the day, John, down 11.9%. And I believe, I'm just checking right now, that does make it the worst day, going all the way back to, it's cycling through lots of data right now, March of 2002.
The pandemic, I believe, back to 2020, potentially, if we sink here at 12%. We're down about 12% right now. Oracle at 111 in early trading. Abby mentioned that note from Brian White of Monness Crespi saying this: valuation has become less compelling, sentiment is overly optimistic, and we believe the darkest days of the downturn are still ahead of us. This is brutal stuff. We're lowering our estimates and downgrading our rating on Oracle to neutral from buy. The latest from Monness Crespi there. Sticking with tech, Apple unveiling the iPhone 15 at the company's biggest event of the year, along with updated versions of the smartwatch and AirPods as well. Ed Ludlow was more on the ground at Cupertino, where all the action takes place. Ed, that one coming up in a few hours' time.
Yeah, and the market's watching. Apple modestly higher, 0.3% at the open. The event, 1 p.m. Eastern, 10 a.m. local time. As we outlined earlier in the show, the big ticket items are 4 variants of a next generation iPhone 15. I say the market's watching. I'm going to leave you to debate with your guests in the hour about the macro implications of what happens with Apple. But from a pure weightings perspective, this is a stock that is 7% of the S&P 500. It is normally the biggest points mover in either direction on the Nasdaq 100. And based on past precedent, the bar is high. Go back to 2011, there have been 12 iPhone unveil events since 2011. Apple shares have only risen on 3 sessions corresponding to those events. So usually they fall, and it's a kind of sell the news type event. But the bigger picture for Apple is more bleak. We've had 3 consecutive quarters of overall sales decline, apart from in Greater China, where there was a swing to top-line growth of 8%. Based on the guidance given on the call for this current period, it looks as if we're on track for a 4th consecutive quarter of sales declines. The question, therefore, is are these technology and hardware upgrades on the iPhone and what we expect from next-generation Apple Watch and AirPods Pro with USB-C connector going to be substantive enough that they drive the consumer globally to do this upgrade cycle that Dan Ives has talked to you about? The estimates range from 150 to 250 million units out there of people that have older generation iPhone. Will they be tempted to upgrade? And the same question for China. Will the iPhone 15 be a hit in China on the higher-end Pro and Pro Max at a time where China's central government is clamping down on foreign handset use within government agency and state-backed enterprise?
Dan's been talking about that upgrade cycle as a bullish thesis for a long time. I touched on it with him in the last week. And at some point, don't we just sit here and say, we need to ask a different question. Why aren't they upgrading?
Yeah, I guess that if you were to ask Mark Gurman, he would give you a pure technology answer, that the updates for generations of iPhone 14 and 13 were incremental. This time around, there is a heavy emphasis on the camera upgrade for the Pro and Pro Max, as well as the titanium sides, a higher quality material, lighter weight, more durable, sort of some pro-specific software updates. Is that enough? We won't know, Jonathan, until after the fact. But this is being billed as one of the more substantive hardware upgrade cycles that Apple has done, or refreshes, in some time.
Ed, thank you, mate. As always, that stock marginally positive. About 5 or 6 minutes into the session, we're high here by 0.1%. Want to stick with tech. Google's antitrust trial gets underway today as it faces a pair of lawsuits that could result in the breakup of the 25-year-old company. Simone Foxman, I'm not sure how many times I've had to read a headline like that in the last 15 years, but there's another one.
Yeah, you probably haven't had to read one this century, because this is the biggest DOJ antitrust suit since Microsoft, certainly the biggest for Google. Now, this really has to deal with arrangements that Google struck with various smartphone manufacturers, with the likes of Apple even, to make Google's search engine the default. Apple likely to get drawn into this in particular, because just in 2022, it had $18 billion worth of revenue from having Safari use Google Chrome as or Google Search as its default search engine. So what the DOJ alleges here is that these agreements have essentially forced out some of Google Search's rivals, the likes of DuckDuckGo, the likes of Bing. That is predatory behavior by the monopoly. Google Search controls 90% of the market. Google, however, says consumers are just one click away from other search engines, and that its deals with these companies are similar to the ones that cereal makers, for example, strike with major grocery stores. Now, this trial is expected to go on for about 10 weeks. We won't likely see a decision until next year, and that could be part of the reason that we're not seeing Google shares move too much outside of the market today. But the potential to break up the company, to move search away from things like Maps or Android, but the possibility that we could see, even if the DOJ wins, some smaller sorts of ramifications, John.
Simone, thank you. Thanks for the update there on Google, Alphabet, whatever we're calling it these days. I want to talk about ARM, planning to price its shares tomorrow, but it's closing its order book a day early, with it already being oversubscribed by 10 times. Mandeep Singh joins us now for more. Mandeep, is this how you build enthusiasm up against the listing? You just do things like this?
I think, look, I mean, it was expected that there will be a lot of interest from large companies. And in this case, you know, TSMC just announced a stake in ARM IPO, and we are hearing Apple and NVIDIA. And look, with ARM specifically, because it was a takeover target, you know, with NVIDIA trying to buy it at $40 billion, there is a sort of that floor on its valuation. So the fact that they priced the IPO around that 50 to 55 billion was a good sign, and I'm not surprised that it's oversubscribed at that valuation.
Mandeep, how much signal should we take from this in the broader equity market, given the uniqueness of this particular listing?
Look, I mean, the dominant theme this year is Gen AI, and it kind of built on cloud. And today we are talking about, you know, Apple launching a new smartphone. The core IP block that underpins all of the innovation is built around ARM. And even though they don't have the pricing power, which is the bear argument that, you know, ARM really relies on royalty revenue, and how often can they increase the pricing on that royalty revenue, the fact is no one wants to move away from that core IP that ARM has. And that's where I think they will have that IP for a very long time.
Mandeep, thank you, sir. A story, a conversation for us later on in the week. About 9 minutes into the session, pulling back by 0.2%. Chris Harvey of Wells Fargo making a bullish call on Uber Cap, saying this: you're getting better growth, better balance sheet, stability with an AI kicker. What's not to like? Chris Harvey joins us now for more. Chris, I was reading through your research, and we'll get to the Uber Caps in just a moment. This is what you had to say on Apple. You didn't have the iPhone ban on your bingo card. Well, Chris, it's on there now. Can you tell me how significant that is, that tension between the US and China, and what it might mean for some of these multinationals listed here in America?
Listen, anytime you have stress between the U.S. and China, it's going to play out in the capital market. It's not a positive thing, right? But I don't think it's the end of the day. Ultimately, what it does is causes volatility in the short term. It could create some quote-unquote opportunity, but we're not focused too much on that. What we're really focused on is seasonality. We're focused on FOMC, and we're focused on inflation or tomorrow's CPI print.
Well, let's talk about tomorrow's CPI print. Cameron Dawson of New Edge was on the program with us about 35 minutes ago, Chris, and she talked about the difference between headline CPI, driven by energy prices and gas, that's going to be elevated, and core CPI, potentially showing more signs of progress. Do you discount one, ignore one, and just focus on the other?
I mean, the answer to that is always, it's the deviation away from expectations, right? If there's a massive deviation versus expectations, you have to take that into account. But really, it is true. You do want to focus on core. You want to see what core is doing, and you want to see more relief. The one thing I will say is that we've looked back over the last couple quarters and last couple months, and one of the things we've seen is that when you have real rates going higher, when you have credit spreads widening out in the month before the print, that's usually not a real positive sign. What you should expect, and what the market's beginning to tell you, is it may be more of an inline to a little bit hotter print, because with higher real rates and higher, or excuse me, wider IG spreads, that's not a real positive thing for inflation. That's telling you the market's reacting to something, and you might want to be a little bit careful going into the print.
So what should I do with $90 crude, Chris? What does that mean for my equity market? What does 91.84 on Brent, 88.68 mean on WTI?
Yeah. John, it's a great question. I had a long conversation with Roger Reed, who covers our energy space. And one of the things he said to me, which I think is true, we're going to be in an environment where it's higher for longer. The incentive to create more supply just isn't there. There's still this very adversarial relationship between the hydrocarbon space and the administration. And you're seeing rig counts come down. So what do you do with it? I think that the belief is that it is going to be higher for longer because of some of the supply-demand dynamics. China, funny thing is, China really hasn't come back online. That could really change the equation. And the last thing is, if that's true, if it's higher for longer, later on, or if some people, if I'm wrong and a lot of people are right that there's going to be a strong recovery next year, then that probably brings the Fed back in because of that inflationary issue.
So, Chris, how does that compete with the original call? Embrace UberCap Tech?
Yeah. So the original call, so just on a sector basis, one of the sectors we loved coming into this year was media and entertainment. And you do have a lot of UberCap names in there. The reason why we liked it is it was a perfect, or what we thought was a perfect GARP type sector. A lot of growth stocks that had gotten beaten down, had been really bad performance last year, and we thought the fundamentals would turn. So it does fit in with the call. Ultimately, what we're telling people is, on a market cap basis, in the short term, it's UberCap. But if you're looking longer term, mid-cap growth is really a good risk reward longer term.
Chris Harvey of Wells Fargo. Chris, appreciate the update from you and the team, as always. Chris there on why it's bullish UberCap Tech, even with the prospect of rates remaining high for longer. Remember that note from Marko Kolanovic over at JP Morgan in the investment bank, trimming their duration overweight by shifting 1% from bonds to cash. This is the why. Given the potential for the commodity price surge to feed inflation and extend central banks' hiking cycles, which speaks to this move in crude, just short of $92 a barrel right now on Brent. We're higher by 1.5% on the session. On WTI, just about to go through 89, up by close to 1.8% today. Coming up, negotiations continue as the auto workers' strike looms.
Part of this move on the labor unions, I think, for the United Auto Workers is staying relevant and making sure that whatever changes occur in the economy, they still have a place.
The latest from Washington, D.C. with AMH, and the latest from Detroit with David Welch. Team coverage up next.
Ireland is a fantastic place to do business. And the reality is that we have an ecosystem in Ireland where there are multinational corporations and a great talent pool.
The dynamicism of the country, the commitment from the government and organizations like the IDA.
There's a degree of practicality, common sense, and thoughtfulness.
We were blown away by the reception we received. The talk matched the walk.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's always for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, a big question coming into the show for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Part of this move on the labor unions, I think, for the United Auto Workers is staying relevant and making sure that whatever changes occur in the economy, they still have a place. Labor does have some more power now than it used to, just because the manufacturing is so much smaller now that the ones who are doing the manufacturing, if they do pull back, that is going to be an issue for those three companies. We're starting to see companies who have been able to charge more for the consumer, their workers are looking back and saying, hey, you guys are making record profits. We would really like a piece of this.
A deal between the United Auto Workers Union and Detroit's Big Three remains elusive just 2 days before the strike deadline. The UAW lowering its pay increase demand to 36% from 40%. But according to our reporting, the automaker's not thinking much of the offer, seeing the demand as boosting labour costs so high that it would threaten their viability. Even a brief UAW strike would cause billions in economic damage. Anderson Economic Group finding that a 10-day work stoppage would reduce US GDP by $5.6 billion. Let's get to the team coverage. Bloomberg's Anne-Marie in DC, David Welch in Detroit. David, first to you. What's on the table? Where is their movement? And what are the chances we get a strike at the end of this week?
The big issues all along remain. It's pay raises, cost of living to protect workers from inflation, and they want to bring back pensions. They've talked about other things like a shorter work week and that sort of thing. I don't think those are really the big issues. It's all about pay, inflation protection, and possibly bringing pensions back. We've seen movement on pay. The UAW went from 40% down to 36%. The companies don't think much of it, but at least it's some movement. I think if the union is serious about pensions, we could have a long strike. If that was sort of a low ball or high ball offer, as the case may be, and they're willing to maybe just get better 401k contributions or something like that rather than a guaranteed pension, then maybe we don't have a long strike. That could be a big defining issue, though, because I think the companies will also move on COLA because that's cost of living allowance. Ford made an offer on that the union didn't like, but you're starting to see the two sides bend a little bit on this whole pay issue.
David, what number do you think gets it done? Based on your reporting, do we have any idea? You've got the union at 36. I've seen offers close to 10% on the table. What gets it done?
I think if you take all the different ways of giving these workers a raise, somewhere around 20% over the 4 years could probably get this done. That's the best raise I've seen for union workers since I've been covering this, and it's higher than the automakers have proposed so far significantly. So somewhere around there, give or take, could maybe get it done.
AMH, we can picture a president nervously waiting in the White House, wondering what on earth he'll do if this strike actually takes place.
Well, that's exactly right, Jonathan, because what you see is really two competing aims of the Biden administration at play here. President Biden says time and time again he wants to be the most pro-labor union president. At the same time, he wants to be a climate president. And at the crux and at the anxiety, a lot of these issues for the UAW workers is the auto industry's move to electric vehicles. Just a month ago, the president put out a statement. Obviously, he was concerned. He talked about wanting the big three to make sure that UAW workers have living good wages to support a family and community. He also talked about the need for a just transition to EVs, and said that those workers should be the first to give a shot at working at an EV plant. Also, Jonathan, the end of the month, we saw the administration give more than $15 billion in funding and in loans to auto companies for the factories to retrofit to EVs. So this isn't starting new plants, say a battery joint venture in the South, but actually using those same factories. So you see the president trying to do two things at once: support the UAW workers, but at the same time support a transition, which may mean you're not going to need as many of those workers.
A transition away from this $92 Brent, $89 WTI. AMH, while you're here, let's finish on that. What does that mean for this White House, this country?
Well, it's very difficult, obviously, because we remember last summer how painful it was for this administration when they were dealing with $5 a gallon gasoline at the same time that we have seen inflation across the board go up, whether it's not just gasoline, but whether it's rent or whether it's groceries. So much so that this was painful to the administration that the president, who once called a pariah the crown prince of Saudi Arabia, Mohammed bin Salman, he actually went to Saudi, and obviously we all saw that meeting and the fist bump that pursued. You have now a gallon of gas inching nationally towards $4 a gallon. This is very concerning for an administration because the president continues to get low approval marks across the board, but especially on the economy.
We're going to say inflation's coming down, and then we're going to look at 384 on gas. AMH, thank you. Anne-Marie, alongside David Welch. Your broader equity market at the moment, 22 minutes into the session, pulling back by just about 0.25% on the S&P 500, on the Nasdaq down by about 0.1, with some sector price action. Here's Abby.
It's interesting, John, because that's a relatively small decline, and yet we have most S&P 500s trading lower. So it's a broad-based decline, and specifically 9 of the 11 sectors are down. 2 higher. Energy, not surprising, leading the way up 1.4%, being boosted by that high price of oil you were just talking about. To the downside, healthcare, real estate, and tech, those are the worst, down more than 0.5%, but no big declines. So as you would say, not a lot of drama here. Where we do have some interesting trading action on the month, though, is September right now is shaping up to be an okay month for the S&P 500. The top sector right now is consumer discretionary, led by Tesla and Amazon.
Abby, thank you. Your trading diary up next.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Coming up to 26 minutes into the session, almost 26 minutes into the session, we're down here by 0.2%. That's the price action coming up through the day and through the rest of this week. Apple's Wanderlust event kicking off at 1 p.m. Eastern Time. Wednesday, we'll get US CPI. Thursday, initial jobless claims, US retail sales, and an ECB rate decision, plus the UAW strike deadline. And on Friday, China eco data, including property prices and industrial production. That's your week ahead. Kicks off with Apple a little bit later this afternoon, and then on to tomorrow morning. The main event is CPI in America. We'll have full coverage of that for you from New York City. Thank you for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The names that move markets are on Bloomberg.
There's a complete change in the labor market. There's a complete change in the energy future that we are facing.
Under tightening would be a worse mistake than over tightening because we can course correct that.
The question is whether we need to increase the pressure or just keep pushing.
We've been getting good news. We just have to keep getting good news.
Nobody covers business like Bloomberg, your global business authority.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. Matt Miller, Paul Sweeney with you here. Coming up, we're going to get the latest on the auto industry and this potential UAW strike. We're going to do that with Joel Levington. He's the Director of Research at Bloomberg Intelligence. He covers the auto industry from the credit side. Then we're going to check in with Monica Defend, head of Amundi Institute, the largest asset manager in Europe. She's going to call up and talk to us about stagflation in Europe and what the investment opportunities there are in Europe. So all that's coming up in the next hour. But first, let's kick things off and get a sense of where these markets are with Karen Moscow.
Yeah, Paul, well, stocks, they are falling today. We're also watching the dollar rebound as traders await a key inflation report. It's going to bring more insights onto the outlook for Federal Reserve policy. That report is due out tomorrow. Tech, though, today weighing with Oracle sinking. We're watching those shares. They're down almost 13% this morning, this after reporting a slowdown in cloud sales. We're also watching Apple. It's down about 0.6% before it unveils updated versions of its iPhone, smartwatch, and AirPods. Also, oil